Well, good morning, everyone, and welcome to our Resource YYC Lunch and Learn. So that you are all aware, Resource YYC is a co-working community geared to professionals. We offer our lunch and learn sessions as a means for our community to network and provide meaningful learning opportunities. We also provide private office spaces, dedicated desks, day drop-ins, and virtual office options. If you're not yet a member with us, we encourage you to check out our website and follow us on social media. Links will be posted in the chat. Today, we have Elliot Cudmore, who is a Director of Business and Development at TSGI Corporation, and his colleague Brad Webb, who is a tax and financial advisor with TSGI. Over to you both.
Great, thanks so much, Rosemary. Nice to meet everybody. Thanks for coming today. I'll just share my screen here, and then Brad and I can quickly just do some introductions. I think that's come up there. I think everyone can see. Good stuff. So as Rosemary said, my name is Elliot. I'm Director of Business Development at TSGI. Mostly help with kind of onboarding new clients and external stuff. And Brad, how about you introduce yourself?
Hi, I'm Brad Webb, also from TSGI. I'm on the tax and financial advising side, so I help our clients after Elliot has helped them get connected with us. I'll help them connect with their SRED and innovation employment grant claims. So help them quantify how much they can get back in credits.
Yeah, for sure. And so as everybody is aware, the topic for today's chat is going to be on trends in the SR&ED program, which is that acronym is Scientific Research and Experimental Development. And then basically its sister program, the Innovation Employment Grant, the IEG, which is basically the provincial version of that program here in Alberta. So we'll jump in. It's a relatively small group today, so please feel free to use the chat function if you'd like to ask a question, or I think it's small enough that you can just take yourself off mic and ask a question, and we can be pretty informal here. So a brief agenda of what we're going to talk about today is we're going to look at some regional and audit trends in the SRED or SRED program nationally versus the Prairie region. And then we'll get into basically explaining what this new innovation employment grant is, and we'll look at some scenarios and Q&A. Yeah, so to start us off, making sure we're all on the same page, the SRED program, I'm going to refer to it as SRED. It's just a bit easier to say, less of a mouthful. So as I mentioned, it's a scientific research and experimental development program. It's a program developed to encourage R&D and innovation in Canada for basically Canada to stay competitive and not lag behind. In terms of its relative scale, it's the largest industrial innovation incentive in Canada. I think a lot of folks might have heard of NRC IRAP grants. To give you a sense of scale, SRED is approximately 10 times the magnitude of that, and it's approximately $4 billion a year in benefits that are basically paid out to companies operating in Canada. So starting off with just a little bit of trends. So this is basically looking at the 2020 government year versus 2021 fiscal government year. So in terms of, this chart has on the left-hand side, the year ending March 31st, 2020, just as COVID was starting to happen. And then this data is up to 11 months ending February 28th, 2021. So in terms of the comparison, and also keeping in mind, this is only 11 months, we basically see an increase of 40% of the total basically refunds or benefits paid out. This acronym ITCs, that stands for investment tax credits. And so those can take the form of basically tax credits, as they sound like, or refundable tax credits are basically cash back. So this chart is basically the sum of both those things. So basically, looking year over year, the number of ITCs that have been claimed by taxpayers have increased dramatically in the 2021 period relative to last year. In total, that's an increase of more than $1 billion. And in terms of what is driving that change or who is driving that change, we're seeing it mostly for companies that are generally larger private companies or publicly traded companies, because those companies are the ones that mostly receive these non-refundable ITCs. And what that basically means is those are the prepaid taxes or tax credits that can be used. For that category, which is this light gray one, the increase year over year is 66%. So quite dramatic. In terms of looking at this, couching it in a kind of a historical context, this graph is showing both the amount of what you can think of as tax credits being paid out, as well as the number of actual claims that have been made. So just to make sure we're all on the same page, each company can make a claim, sorry, any company who is a taxpayer in Canada can make a claim, and that's relative to their corporate taxes. SRED goes in basically as a tax form along with your corporate taxes. So for every fiscal period, you can make a claim per period. So the orange line is the number of claims. And as you can see, back in 2014, it was quite a lot higher. It was approximately 25,000. And it's kind of declined a little bit over time to 2018, where it's held relatively stable at around 18 or 19,000 claims per year. So we haven't really seen a change in the number of claims that are being made, but oddly enough, the number of tax credits or ITCs that have been claimed is basically back at its high water mark in 2014. So we can see this kind of graph on the left. It's just shy of $4.4 billion. So it kind of was at this high water mark, and then it dipped over the last couple of years. And then in 2021, it's basically returned to that high water mark. So pretty interesting to see that reversal. And I think that a large part of that is due to some interest in basically support from government as a result of COVID. So in terms of looking at trends across different regions of Canada, these graphs basically compare the amount of claims that have been selected for a review or an audit, as you can think of. So just to make sure we're on the same page, a claim can be selected for a review or audited, and then out of that audit, the government or CRA can adjust their claim and basically say that some costs, we're going to decline some costs. We're going to say that this stuff doesn't qualify. So this chart is kind of comparing the numbers that are selected for audit, and then out of those audits, how many are actually adjusted and what does the adjustment look like? So on the left side, we've got the various regions. So you have Atlantic, Quebec, Ontario, the Prairies, and Pacific. And this dashed line is the national average. So in terms of claims that are selected for an on-site review, which is like a more fulsome, intense audit, you can think of it, the average across Canada is around 14.1%. So Atlantic region is basically right at the average. Quebec's a little bit higher. Ontario is lower than the average, and Pacific's lower than the average. But Alberta is quite a lot, or the Prairies are quite a lot higher. So we're almost scratching 20%, which relative to a baseline of 14% is, approximately 150% of the national average of claims that are selected for reviews. So pretty dramatic. And then also once they are selected for a review, if we look at the adjustments, so the amount of costs that are basically declined, the weighted national average. So what I mean by that is, like, if you take the total amount of dollars claimed and the total amount of adjustments, the average is 7.4% are rejected, or adjustments to the claims. So that's this dashed line here. But the Prairies is almost double that weighted national average at almost 14%. The only one that comes close is Atlantic. And by comparison, the Pacific region is in the 3.5% range. So quite dramatic. This is again for the 2020 year. And just keep in mind that that's the year ending March 31st, 2020. So it captures a lot of months in 2019, and it doesn't really capture the COVID period. And then skipping ahead to the next year, 2021, some of the trends still stay the same, but the absolute numbers are quite different. So whereas before the national average of those claims selected for audits was 14%, the national average here is 5.2%. So basically, because of COVID, there was a large reduction in the number of audits that were conducted by CRA. However, the trend of Alberta being an outlier, or the Prairies being an outlier, is still holds. So whereas the national average is 5.2%, the Prairies is at almost 11. They're almost at 11%. So more than double what the national average for audits were. And then in terms of actual, adjustments being made, the absolute numbers here are quite a bit lower. Whereas before, I think it was around 7%, 7.5%. The national average dropped to less than half of that at 3.6%. And the prairies are still higher than the national average, but it's not as much of an outlier. So just some trends to be aware of. And I guess the question you might be asking yourself is, why is this the case? So we have reached out to CRA's assistant director for the Prairie region to comment on this. We haven't heard back from them yet, but I guess to keep in mind, claims that are over $10 million have been identified by CRA as a priority area for review. And as you can guess, in the prairies, there's a lot of oil and gas producers, larger energy service companies that would typically have larger size claims, and they're located in these regions. So that might be one other reason. Another reason might be that mechanical engineering claims have been a focus area for CRA audits. And obviously, you know, energy service companies are doing things like rig design and so on that might have some pretty large mechanical engineering type field of study relative to Ontario, where in Ontario there's a lot of software claims or manufacturing things like food and beverage. So those are a couple of trends. Are there any questions on the last couple of slides that I just went through? Okay, seeing none, I'll just continue on. So going into the IEG, and I'll pass things over to Brad. Or actually, before I pass things over to Brad, I'm going to quickly describe this slide. This is basically describing what is the SRED program. So the IEG, Innovation Employment Grant, basically they use the same technical criteria that is through the federal SRED framework. So I just wanted to briefly describe what the SRED technical criteria is, because it's the same criteria for the Innovation Employment Grant. So if you're wondering on today's call, you know, does my company qualify for the Innovation Employment Grant? This technical eligibility criteria is something that you'll have to address. So basically the CRA uses these 5 questions to ascertain whether or not the nature of the work you're doing qualifies on the technical side. So basically there needs to be some kind of advancements in your understanding or your company's understanding of science or technology. And so they use these 5 questions to kind of determine if that's the case. And for the most part, I'd say that more than 90% of disagreements with CRA hinge on the very first question, which is the most important question. So the question is, was there a scientific or technological uncertainty in your project? And what this really gets to is like, is there a knowledge gap? Is there something that I couldn't answer by just kind of looking it up on the internet or looking to established means in my field of study or industry? Is there something that I basically wasn't sure if it was going to work in the real world without doing some kind of test or analysis? So basically, if you can identify there's a knowledge gap, that's the first step along the pathway. And the second part is, the second question is, did the effort involve formulating a hypothesis or hypotheses aimed at reducing or eliminating that uncertainty? So what this is getting at is basically, did you have an idea? Did you have a proposed solution of how and why you thought that your solution was going to overcome this knowledge gap? And then next we have, was the procedure consistent with a systematic investigation or search by means of experiment or analysis? I know this is like a fairly involved question. What they're really getting at is basically like the scientific method. Did you guys just throw a million things at the wall and see what sticks? Or were you taking like a very deliberate approach to kind of see what is the effect of changing this part of our technology or our science? And did we do it kind of iteratively to see what the results were and then incorporate those learnings? And the fourth question is, did the process attempt a scientific or technological advancement? And so that's getting at 2 things. One is kind of understanding the why of what's happening underneath. And it also is getting at the fact that there's this word attempt, which means that your project can totally fail. It can be a total failure, but that also eliminates one possible outcome or solution. So that is advancing your company's understanding of science or technology. And then the last question has to do with, it's kind of procedural, it has to do with documentation. So was documentation kept of the process and the results? And so that's keeping track of your learnings and basically feeding those in to basically restart the process and say, okay, what's our next solution going to be? So that's fairly technical, but this is basically the foundation of the Innovation Employment Grant, which is Alberta's program that kind of matches the federal one. So I think now I'm going to pass it over to Brad to kind of get into the nitty gritty of the innovation employment grants.
So a little bit of a timeline here. Back, I think it was 2009, Alberta introduced a provincial version of the federal SRED program. And we were one of the last provinces to do so. In 2015, when the NDP was elected, they didn't change any of the SRED program. They added something called the Alberta Investment Tax Credit. So it added a little bit more incentive to technology and innovation. When the UCP was elected in 2019, they wanted to change up a lot of the grants and tax credits. So they canceled the SRED program and the AITC. There's a lot of pushback from the innovation community in Alberta saying, hey, we need some support here. So in late, well, I guess it was mid-2020, the UCP government announced this IEG, or the Innovation Employment Grant. And at first we didn't have very many details, but then legislation came out a little bit later in the fall, and it received royal assent in the fall of 2020 here. And the IEG was launched for expenditures happening from January 1st, 2021 and onward. So there's no Alberta support for SRED-like programs between January 1st, 2020 and January 1st, 2021. But we're excited for this relaunch of the program. Thank you. I was going to say I don't have control to skip. So despite the word grant in the name, the Innovation Employment Grant, it is more like the SRED program, where if you have qualifying expenditures, you get it. There's no question of whether you get the support or not. And it is administered through the tax credit system, similar to how the previous SRED program worked. One new change is that it's limited to prior year taxable companies with prior year taxable capital of less than 50 million. So that the idea is that they want to support small to medium-sized entities and enterprises. One other change with the IEG versus the old SRED program in Alberta is that it's supporting surges in spending. There's a base level spend that you get a base percentage on, and then anything above that gets a higher percentage. So they're trying to encourage new spending in innovation. General buckets of categories of what qualifies for an expenditure would be wages, materials, and overhead. There's also some contractor payments in there that can be covered. All these would be around the technical work being done towards overcoming that knowledge gap that Elliot had talked about. And one last thing here is that it's industry agnostic. The program doesn't specify which industries it's supporting. As long as your company is doing something in that innovation space that qualifies for the SRED program, you qualify for the IEG program as well. So this functionally replaces the Alberta SRED program that was canceled in 2019. It's basically SRED 2.0 with some slight tweaks on who it's targeting. Qualifying expenditures would be the same as for the federal SRED program, but for the Alberta program, they're capped at 4 million. So anything spent above $4 million could maybe qualify for some tax credits on the federal side, but it would be capped at 4 million for the Alberta provincial program. I was talking a little bit before about the base level spend. So you get 8% back. It used to be 10%, so it's a little bit lower on that, but not very much lower. But then anything above that base level spend, which is the average of the last 2 years of what was spent in Alberta for your SRED, anything above that gets an extra 12%, so a total of 20 on that incremental. So they're really looking to really support that new spending instead of just your average. So this table shows a little bit, you're going back and forth on me here, Elliot, there we go. This table shows a little bit of the different categories or situations companies might be in. CCPC here stands for Canadian Controlled Private Corporation, And most startups are probably going to be in this area here. And you're going to get federal ITCs or investment tax credits that are refundable at 35%. And then the Alberta investment tax credits through the IEG program are going to be between 8 and 20%, depending on your base level and everything like that. Sadly, we don't do A plus B does not equal C in tax math because the Alberta, what you get back from a provincial program reduces how much the federal program applies 35% to. So it's not exactly 1 plus 2 equals 3, but it's pretty close. So the net benefit for a CCPC in Alberta is probably around 40 to 48%, depending on how much that base level is. One thing on the furthest right column here is on labor. When claiming overhead, there's a method that the government allows us to do that with. Yeah, right there. Yeah, on labor, when we're adding the what's called the proxy method for overhead, they let us bump up 55% of what's on your T4 SRED labor. So for those laborers who are working in the SRED program or on a company's SRED, you can get 155% back on or included in your claim there. So it ends up being about 62 to 74% of those SRED wages you get back in most likely in taxable or refundable tax credits, so cash back. So it can be quite lucrative for those who are employing people to do their SRED in the company.
So I know we just threw a ton of numbers at you guys. How about we just pause here for any questions? Okay, as Rosemary mentioned, these slides will be available afterwards in the recording of this. So if you do have any questions on how this works or what category I'm in or what's this whole thing about 1.55, just let us know. Sorry, trying to go to the next slide. There we go.
There we go. So I alluded to this a little bit before, but there's 4 main categories that your costs could be in once there's a project, that's been established as being eligible through the 5 questions that Elliot talked about before. So there's T4 salaries for labor. Sadly, dividends, if you're an owner manager, doesn't count. So you'd have to be paying yourself a salary if you're an owner manager. So the other is contracts. If you're employing somebody else to do some of the analysis or testing or design of your SRED project. Materials, if you're doing anything physical, that you're building a prototype, for example, anything that you're putting into the actual thing that you're doing testing on can be claimed. And there's a couple different ways it's either consumed or transformed, but that's getting into the weeds. And then overhead. There's 2 different ways I mentioned. There's the proxy method and the traditional method. Traditional method, we go through and look at anything that could be qualified as overhead. It's not directly in relation to the SRED, but it's required in order to support the SRED. With the proxy, it's a lot simpler and usually, in many cases, ends up in a larger refund for the company, where they give us that 55% boost to any T4 salaries for labor. It's usually a little bit easier to defend in the case of a review. And like I said, it usually ends up in a larger, in most cases. Some industries do have a lot of overhead, specifically in oil and gas producing. So those, we at TSGI often take a look at which one would be better for you and recommend which way to go. Those are the categories for SRED. So the IEG stands up versus, so the left side is the old Alberta SRED program that was canceled in 2019, or at the end of 2019. And the right-hand side is for the details of the new Innovation Employment Grant. You can see they're very similar. They're both refundable credits administered through the corporate tax system here in Alberta. They're both capped at $4 million. They both use the federal SRED qualifying expenditures to determine what is eligible for the refund. The main difference here is the amount. On the old one, it was 10%. On the new version of the program, it's 8% on the base level and 20% on everything above that. It's that extra 12%. Like I said, government math, tax math doesn't always equal A plus B equals C. They take basically provincial investment tax credits grind or reduce the federal tax, federal ITCs. But as you can see for the second two bullets, the overall yield we're expecting for most companies in Alberta, assuming that they're a Canadian controlled private corporation under 50 million in taxable capital, is very similar. Like the 41.5% is what we would expect on the old program. The lowest we would expect on the new program is 40.2. So it's very similar. And there's the high-end possibility of 48%. If you're just starting out and have a very low base level, or yeah, we'll go with that. Maybe I'll pass it back to it for the scenarios.
Sure. Any questions before we kind of exit that last section? We can go back to any slides if anyone has any questions.
I do have a question, just kind of about, so it's called a grant, but so typically with grants, you have an application process. From what I'm understanding here is there's no real program that you apply to. You just kind of submit the expenditures for tax credits during like the tax season. Is that how that kind of works?
Yeah, great question. So I mentioned it's kind of like it goes in with your tax forms. So it's different than a grant application where they have like an application window and you apply to all these specific questions. The tax forms themselves have two components. So one of them are all the expenditures that Brad's referring to, which is why we've got a team of CPAs that work on this stuff, because it's a bunch of complex nuanced tax calculations. And then in addition to the tax side of it, there's also the written application that goes in with your tax forms. So it's a word cap limited section in the tax forms, and it basically describes the nature of the project, what you were trying to accomplish, and what were some of the outcomes from it. So our part of TSGI Corporation's team, half our team are scientists and engineers who basically work with our clients to understand their projects and then formulate and strategically compile the written application, which we refer to as the science descriptions. So it doesn't take the form of a typical kind of grant application, but there is certainly a written part of it that you have to describe what work had taken place and what some of the challenges were.
Awesome, thank you.
Yeah, great question. Any other questions? Okay, great. Well, feel free to jump in if you do have one. So we're just going to go through a couple of quick scenarios here just to help contextualize what does this new program mean? What would be some of the impacts for different types of companies? So in terms of our first example, we have a company that is basically increasing their R&D spend by $250,000 a year. That may not be, like a reasonable number for a small startup company, but just as maybe assuming that it's a more established company. So in year one, and sorry, let's assume this is 2021 in year one and continuing on. So looking at their previous years, that would inform what their baseline spend is. So if we go to the next slide, we're going to assume that basically the base level would be calculated as the average of 2019 and 2020 expenditures. And using that, basically this is what calculates out to be the Alberta portion of the refund is, the maximum would be 20%, the baseline would be 8%. So based on their spend, it's going to be in the mid-teens. And then as the incremental $250,000 a year adds to this already growing profile of R&D spend, their refund is going to drop off a little bit, but it's still going to be quite healthy as they are growing quite steadily. So at the maximum, the blended rate between the federal program and the Alberta one is giving them about 44% back on the dollar. So if they're spending, $100,000 in R&D in a year, you're getting back $44,000 between the two programs. Going to the second example, this is a much more kind of moderate growth. So assume that a company is reinvesting in their R&D program every year, and they're adding an incremental 10% every year into their R&D budget. Basically, what the effect of this is, this kind of demonstrates that their Alberta refund is holding steady at around just shy of 10%. So basically, the takeaway is that to kind of have parity with the previous Alberta SR&ED program, a company needs to be kind of increasing the R&D spend by 10% or a little bit over 10% every year, because this is basically holding a little bit, most of it's going to be in their base level spend, and then that 10% is going to be considered at the incremental level, so it's attracting 20% back. So the net effect of these two programs is around, or those two buckets averages out to just shy of 10%. And at a minimum, basically, they're getting back that 40.2%. So this is the third example is kind of an interesting one. So we're going to assume that a company has just opened shop. Their first year of operation is in 2021, which means that in 2020, there was no filing whatsoever. So in order for us to calculate the base level spend, we're looking at the previous 2 years of expenditures to calculate that. So basically, we take just in here the second bullet, 2021 expenditures, which is the low tens of thousands, and then 0 for the year 2020, and we're dividing it by 2. So what that means is that as this company has a major financial backing in this scenario, and they spend the maximum amount, which is $4 million, basically they are able to capture almost all of that upside, almost all of that $4 million at the maximum rate of 20% back. And then as their base level spend starts to integrate and kind of adjust to this high level of spend, maxing out the Alberta portion, their rate for the Alberta program, the IEG, drops to the minimum, which is 8% back. So what's interesting though is that, I mean, if a company had the choice or the option, it makes sense to kind of capitalize on that calculation and get as much into that incremental bucket as possible. And that kind of leads to our fourth and final example, which is basically looking at a volatile spending profile, which is where a company is ratcheting up their R&D program and then dropping it. And basically what this, I don't have a chart here that basically summarizes it, but the math behind this shows that they are, based on the pattern in which they spend their dollars, their R&D dollars, they're able to capture more money through the IEG program by having this volatile spending, because it basically takes advantage of resetting your base level spend to be at a lower baseline. And then that allows you to recoup some of the upside of having a lot of dollars invested the following year. So basically for every year, you're looking at the base level spend is calculated for the previous 2 years. So that's why this 2024 year, it's not just at 8%, it's in the mid-teens. So, these are kind of hypotheticals. It's not practical for a company to just design their R&D program around kind of gaming the system of this incentive program, but it's just a little bit informative to tell you where your R&D spend might trend towards if you guys have a different profile of spend from year to year. But the core takeaway is basically that the program does offer an incentive to companies to increase or ratchet up their R&D spend from year to year. So I think that kind of covers most of the scenarios that we have. I guess a couple of brief, frequently asked questions. So one thing is, do I need to do anything different to take advantage of IEG? And this is based on the assumption that your company is already applying or actively participating in the SRED program, because the short answer is basically no. Basically, the program piggybacks in a lot of ways off of the SRED program. There are different tax forms that you have to fill out, but basically it's not a different written application. Those are covered by the technical submission through the SRED program, and you don't need to do anything different with basically tracking expenditures, because those are going to be the same methods you use to track your expenditures for the SRED program. But I guess the one thing to keep in mind is that the IEG is a provincial Alberta program. So you want to keep in mind that you're basically earmarking or keeping track of costs that are incurred in Alberta. The second question is, what if I'm making a SRED claim and innovation employment grant claim for the first time in my 2021 year? How would my baseline be calculated? And basically the short answer is that the baseline is nil for the previous 2 years. So if your first time if your first time ever claiming the program is in 2021, then basically all of those expenditures will be attracting that 20% in that first claim. And then this is probably less relevant for the folks on today's call, just given the audience, but the question might be, can I claim IEG if I'm a publicly traded company? And the answer is yes, because the cap is basically any company can apply, but you have to be below $50 million of taxable capital in the previous year. So it doesn't matter if you're publicly traded or if you're privately owned. The main thing to keep in mind is just that threshold of $50 million of taxable capital, again, which probably is less relevant for the folks on today's call, but maybe if you're consulting with a company that is a publicly traded company, this would be information you'd want to know. So I think that covers off some of the most burning questions we typically have in this kind of setting. Are there any other questions I can answer at this time, that we can answer at this time? Okay, I think just one more slide. Yeah, I guess just to, Brad and I kind of introduced ourselves at the top. We didn't really explain what our company is. So I'm sure you piece this together, but basically TSGI, we help companies apply for the SRED program as well as IEG program because they're very related. And we're basically the largest team, private team of SRED specialists in the prairies. We've got approximately 18 people. We're based here in Calgary. We service mainly Alberta companies. And you may not have heard of us before because we're mostly a referral-based company. We don't do a lot of public advertising, but we're very focused on our service delivery to our clients and very, very client-focused. So, and in terms of what we do, we basically tackle all aspects of the SRED and IEG application and navigating through the audit process. So, yeah. Essentially, that involves assessing projects for eligibility. So I know I described those 5 questions of what makes a project technically eligible. Those can be hard to just apply to your project if you just take that slide back. It's a lot easier to have a conversation. So we have no pressure eligibility chats with clients to see if their project does qualify. So if you're curious and you're wondering, does my project qualify for this program? Feel free to reach out to me. I'd be happy to have a conversation with you. Again, no obligation, just it helps to keep you informed on whether or not you qualify. And then our services include the advisory, looking at tools, capacity building and training, templates designed for your company, strategies on the tax planning side and optimizing your claim. And then obviously like doing the claim and preparing the tax schedules and the science descriptions. And then once it's submitted, we will kind of monitor and navigate and steward your claim through that process. And if it's selected for review, we provide defense services to basically defend that claim under audit with CRA. So quick overview of who we are and what we do. So if you have any questions, please feel free to reach out to myself or Brad. I think both of our contact information is available through Rosemary, or we can send it out in an email afterwards. But we'll pause for any last questions, but feel free to reach out to us afterwards if you do. Thanks very much.
Well, thank you everyone for participating. If you can't unmute, feel free to put any questions in the chat. We have had a couple people leave early and thanking us for the presentation in the chat. So that's very nice of them. And it was very informative. So I hope everyone got at least a little something out of it.
Great. Well, thank you so much to you guys for having us and for inviting us to present. And good to meet everybody. If anybody has any questions, feel free to reach out to us afterwards.
All right. Appreciate your time.
Thanks very much.
Thanks.
Thank you so much for presenting. It was very informative. So, and if anybody needs, we will also be posting the recording on our website. So you can access it later. All right.
Okay, thank you. Have a great day.
Bye.
Bye for now.